Hello, my friends, and probably my enemies, or something like that. My critics. I'm here to talk today about the New Deal, and specifically how the New Deal, part of the New Deal, could be used to help us in our current 2020 financial crisis. I'm here as usual from the fabulous 2020 New Deal Hollywood Studios, which is my basement. I'm stuck in my basement because it is the Sharona Cyrus quarantine of 2020. And yeah, so I've been doing these videos out of my basement because really, what else am I going to do? So you might be asking yourself at some point in your life, and I don't know when this is going to happen, how come it is that I work, my wife works, um, I try to be pretty frugal, and I still have all this debt. I've got student loan debt, credit card debt, maybe mortgage debt, probably mortgage debt that you're trying to pay off. And your mortgage seems pretty high. And I am here to answer those questions for you and how to improve our economy so that we don't have a situation where we have a certain class of people. We have in the United States our wonderful interest rate apartheid. One rate for you, another rate for the banks. I'm sure everybody out there enjoys their negative 1% credit card rate where the credit cards actually pay you. You don't get that. The banks get that. They get negative 1%. And why? So anyway, I am here to talk about reforms from that I think we could implement. Now, in the New Deal, there was relief, recovery, and reform. New Deal started, or the crash started in 1929, and the New Deal came around in 1933. I am going to specifically talk about reform, and I'm going to talk about some of the reforms from the New Deal and how those might help us today. So first thing I want to talk about, though, is goals. And basically the goal, the overarching goal is to stabilize the economy, stabilize prices, stabilize the currency. We don't need money that's constantly going up and down. We don't need big job losses and suddenly we don't need the as Max Kaiser calls it, the American casino gulag financial model. We want to get out of the casino gulag. We want the financial model to be pretty much like electricity or water. We need the finance. We need to provide. We need finance to almost act like a utility and be stable. Stability is the goal. So first, the thing we're going to talk about is we absolutely need to end. And now these are the goals of the reforms. I'm going to go through the goals and the specific reforms that we will need to accomplish those goals. So the first thing I'm going to do is go through the goals. And goal number one is end too big to fail, too big to jail. And a lot of that it has to do with Glass Steagall. And if you don't believe in too big to fail, just look at companies like Wells Fargo. Wells Fargo is not the only one, but they're certainly one of the leading contenders for reform. They opened 1.5 million accounts fraudulently. They charged their customers for those accounts, and they should have been put out of business. And somebody should have gone to jail, but they didn't. And then on top of that, we just had the Paycheck Protection Program, where the government was putting billions and billions and billions of dollars for small business. But where did you have to go to get your money? Where would be the perfect place to distribute money to small business? I got it. Wells Fargo. And what happened? Wells Fargo did what Wells Fargo does. Makes money. And boy, did they make money. Because at the end of the day, we don't know where that money went. There's some companies that are being listed. And on top of that, there's all kinds of lawsuits right now against Wells Fargo and numerous other banks for the way that money was distributed. So Wells Fargo did what Wells Fargo has always done. That is a perfect example of too big to fail, too big to jail. If a company cannot be safely put out of business, if the company goes out of business, and it takes too much of the economy, it destabilizes the economy, then it's too big to exist. That does not help us at all. any kinds of efficiencies that we might get in that large a company are completely undermined by the effect that it has on the economy if it goes out of business. And at that point, what do you call a giant bureaucracy that can't go out of business? For all you capitalist free market libertarians, I would call that, and I know this is going to blow your mind, I would call that a government bureaucracy. I think at a certain point, when these guys become too large, they start to emulate basically the government. But it's worse because they don't really provide any services. What they're providing, what they're actually doing is we're just paying them to stay in business. We need to end too big to fail, too big to jail. We need to make it harder for bubbles to exist. Everybody loves bubbles when it's going up, when that mortgage is, when every day you look at your house price and, oh my gosh, the value of my house has increased 20,000 since last month. Oh, it's up 100,000 this year. Oh, it's wonderful. And then, it all came crashing down. Bubbles, we need to make it more difficult for bubbles to exist. And a lot of that has to do with finance. So bubbles should not be the goal. Right now, Americans have mortgage debt because housing prices are way too high for the amount of money that people make. We have rental-backed securities. Wall Street, who we bailed out last time, was happy enough to use that money to buy new houses, which we have to pay rent on, and they created rental-backed securities. We have corporate paper, collateralized loan obligations, so they're collateralizing business. They're collateralizing business debt, so the businesses are strapped with that. So we've got bubbles in bubbles. It's the infinite bubble economy where everything's going to be a bubble. We're all going to make money on the bubble, except for when it pops, and then we're all going to freak out when it pops. We have to stop that system. We have to get more accurate credit ratings, and we have to hold the ratings agencies legally liable for the ratings they're giving. I'm not talking about ratings for individuals. I'm talking about ratings for derivatives. You have derivatives right now, collateralized CLOs or collateralized piles of debt. And when those are rated, they get a AAA rating or a AA rating or something, and they're junk bond status. And the credit rating agency's argument for that is freedom of speech. It's just our opinion. You can't be sued. Okay, well, I think that needs to change. There needs to be some ability to get some money out of the credit rating agency because they're not being held responsible for what they do. They're selling positive ratings to the banks, and that has to stop. The number one thing that we need to do, whether you're a liberal or conservative or whatever else, is we need to end the privately held tax system. People complain about taxes all the time. Oh, man, what I've always failed to understand is we have these banks, these companies, and they want to get bonuses and when the times are good, it's like, oh, give me the money. I'm so smart. I'm a job creator. I'm a visionary. Give me the money. And then when times are bad, it's not their problem anymore. So they take the benefits and but they avoid the risk. So it's risk without any kind of responsibility. That to me is a privately held tax system. We have to put money in to keep these type of businesses in business. That has to end. We have to separate risk, and we have to basically stop separating risk from reward. And in risk, the one type of risk that we need to really, really look at is hedge funds. Hedge funds don't want to be regulated. Well, why can banks invest in hedge funds? We're supposed to be able to put our money into the bank and be able to get it out. We're supposed to have that money insured by the FDIC. Why are banks allowed to invest in hedge funds? That is ridiculous. In addition, why are banks allowed to make investments similar to hedge funds? We have to make this a lot simpler because the more complicated our financial system becomes, the easier it is to create fraud and basically just steal money. The more complicated it becomes, the easier it is to find ways to siphon money out of it. And that's what's happened. We need to understand the difference between gambling and insurance. And I'm specifically talking about credit default swaps. If I went to a doctor and that doctor was able to take a life insurance policy on me. So I go to the doctor, I say, hey, doctor, I got some kind of chest problem or something here. And he says, great, here, let me fix you. And then the minute I walked out the door, the doctor calls up the life insurance agency and says, this guy, I just looked at his chest. I don't think he's going to make it. Let's take out $1 million life insurance policy on him. You would think that was probably like one of the worst ideas possible. But that's where the way credit default swaps work, and they sure did during the 2008 financial crisis. We don't need that. Credit default swaps are insurance, and they need to be regulated on it as insurance. If you take a 40-to-1 bet, if you've got 40-to-1 leverage or whatever else, and also we always need to see who the counterparty is. If I'm making this huge bet, who's going to end up paying for this bet if it fails? Is it a pension fund? Is it some kind of government money? Is it money from a county? We need to figure that out. And that's really, really important. And before you go on, I'd like to mention that this is a nonpartisan video. I hate everyone. I don't like Democrats, and I certainly don't like Republicans. Now, in selected cases and in some circumstances, there are members of both parties that I like. For instance, I think Elizabeth Warren's Consumer Financial Protection Bureau was a great idea. I think Elizabeth Warren knows a lot about financial reform. And in that way, I really like some of the things that Elizabeth Warren says. Unfortunately, she's turned herself into a sexually harassed Native American activist or something that I completely don't understand. So again, this requires a level of nuance. I may like one policy that you have and dislike something else about you. This is not Republicans, this isn't Democrats. Trust me, there is plenty of blame to go around. And whenever either of these parties gets involved, usually it's because they got some way to make money out of it, or they want to put some, shisty, underhanded individual into place so they can make more money. After this, I'm going to be talking about the Glass Steagall Act. In my next video, I'll be talking about the Glass Steagall Act. My last video, I talked about where I think my heartfelt hope where this financial crisis is going to end. And it's going to end here because we have no other choice. It's going to end sooner or later. There's a lot of bad places this can go. And we only really are going to have, I think that the only options we have are going to be bad options. Eventually we are going to have a jubilee, a debt jubilee, as has happened in civilizations throughout history. It's in Jewish law, it's biblical. Muslims can't even borrow money, which, by the way, I think is a good idea. So that's where it's going to end. We have to figure a way to bail out debtors and force creditors to write that stuff down and go out of business. That's the end game. Because and the faster we get there, the better it's going to be. It's not a wonderful solution, but it's going to be the only solution that we have. Anything else would be much, much worse. So in my next video, I'm going to talk about why we need to bring back what we had in the first place, which was the Glass Steagall Act of 1933, which helped stabilize our financial system for 50 or 60 years before it was overturned. Oh, by the way, I want to say something else too. If you like me, if you hate me, if you want to criticize me, if you think that there's things in this list that I should be adding, subtracting, you want to argue with me, you want to call me a big dummy, I'm totally fine with that. I can take it. I'm not that sensitive. I'll be fine. I'd get over it. But if you do want to interact with me and debate me, whatever else, you're perfectly welcome to do that. You can leave a comment, do whatever you want to do. My feelings won't get hurt. I honestly believe in free speech. I believe that we'll all get smarter if we can debate ideas and try to change each other's minds. And if you're hardcore conservative, libertarian, you hate what I'm saying, I'm not going to go out there. I'm not going to hate you because you don't like my idea. And if you're like some kind of radical left-winger who I've offended by whatever my, I don't know, I'm sure it has something to do. If it's hate speech or whatever I'm doing that you think is, that you are going to, I mean, that's what usually it happens. Like if I argue about something in the economy, it turns into you, that's hate speech or that's whatever. I don't care. If you want to argue with me, I'm not going to hate you either. So I would actually welcome your comments and hopefully we can talk about it and come to some sort of conclusion. And even if you just want to insult me and tell me I'm too ugly to be on the internet, you can do that too. I don't care.